All right, let's get straight to it. The headline you're seeing everywhere, that 11-day winning streak in the Korean market, ignore it. That is not the real story. The key takeaway, the thing that matters for the US Open, is the massive return of foreign programmatic buying. A huge algorithmic switch has been flipped, and that sends a very clear signal for US tech. Okay, so this is what everyone's talking about, this impressive run on the KSPI. Looks great, right? Well, this is a total distraction. It's the shiny object designed to catch your eye. Smart money looks deeper. This surface-level action is hiding a powerful, incredibly targeted capital flow happening just beneath. Our job is to find the real mechanism.
So let's just toss that headline in the bin. We're starting our investigation. And we're not asking what the market did. That's the easy part. We're asking how it did it. The logic vector is everything.
And here's our first piece of evidence. Over 405 billion Korean won in foreign net buys. Now, this scale isn't just retail enthusiasm. No way. A number this big, this is the clear footprint of a large institutional algorithm at work. And this, right here, perfectly illustrates what I call the index illusion. Just look at this divergence. While foreign money brute forced the large-cap KOSPI higher, they were actively selling the KOSDAQ. So this wasn't some broad risk-on rally for Korea, not even close. This was a highly specific, targeted injection of capital. The market heat map confirms it. See that massive green block? That's Samsung Electronics, lighting up the entire board. The buying was laser-focused. And this is the crucial point. This was not a bet on the Korean economy. This was a tactical strike on a critical node in the global AI supply chain. So, this brings us to the machine behind the move, the algorithmic footprint. We're not looking at thousands of traders all making individual choices here. We are seeing one machine executing a single, powerful command. We call this programmatic buying, and here's how it works. A giant asset manager somewhere decides to pour money into a country-specific ETF. The second that happens, algorithms are automatically triggered to buy the biggest stocks in that index. It is a mechanical, brute force move based on global liquidity flows, not a reaction to a company press release. So what flipped the switch? TSMC's record-breaking earnings. That single report was the global confirmation that the AI supercycle is not slowing down. It was the ultimate green light for algorithms to ramp up exposure to the entire AI hardware layer, starting with the memory supply chain.
Okay, so now we know how the capital moved. Let's decode what this basket trade was actually targeting. What's the specific technology these algorithms are hunting?
The real target is this, high bandwidth memory, or HBM. This is the absolutely critical layer that feeds data into AI accelerators like Nvidia's GPUs. The signal from TSMC confirmed a massive, ongoing demand for this stuff, so the algorithms responded by buying the world's top HBM suppliers, Samsung and SK Hynix. It's that direct. And check this out, another outlier signal that validates the whole theme. Doosan Enerbility, a key supply chain node for energy infrastructure, saw signal activation of nearly 6.5%. This is a direct play on powering the data centers that house all this new AI hardware. The smart money isn't just buying the chips, they're buying the power plants needed to run them. So now we bridge this analysis directly to the US session. The signal may have started in Asia, but trust me, its final destination is the US market. Think of it like this. Capital always follows the supply chain. The order for more AI hardware was confirmed in Taiwan. The capital was deployed to the memory makers in Korea. And now that entire wave is headed straight for the US hardware leaders who sit right at the top of that chain. All right, let's get tactical. Here is your vector check for the US session. These are the key triggers and the levels you need to be watching. Remember, we focus on execution, not prediction. We've got two main triggers on the radar. First, at 9:15 a.m. Eastern, is U.S. industrial production. It's low impact, but a big miss could get people talking about rate cuts again. The more important one, though, is at 2 p.m. PNC financial earnings. This gives us a great read on U.S. loan health. A beat confirms the economy is holding up. A miss could signal credit stress and bring out the sellers. Here are your key tactical levels for NASDAQ futures. The bull case is simple. As long as we hold above 25,741, the trend is aggressive and the next target is 26,000. The bear case? That's the trap. A decisive break below 25,000 would confirm a blow-off top and signal an immediate rotation to defense. So, this brings our focus down to 4 key tickers. We're watching the semiconductor leaders, Nvidia and Micron, for that follow-through from the Asian hardware signal. At the same time, we're keeping an eye on financials like PNC and JP Morgan for that broader macro health check.
So the bottom line is this. The Asian session just confirmed the hardware bull run is fully intact. The strategy is to hold your semiconductor positions and use the financials as your early warning system for any signs of macro weakness.
The institutional algorithm has shown its hand. It's making a huge bet on the AI hardware supply chain. The signal has been sent loud and clear. So the only question left is, how will you position for the echo in US tech?